talk about the statement of cash flows, one of the most important tools you'll need to understand as a certified fraud examiner. If you're preparing for the CFE exam, this isn't just a financial report, it's where fraud leaves a trace. What it is. The cash flow statement tells you one simple thing: what cash came in, and what cash went out. It focuses only on actual cash, not estimates, not projections, just the real movement of money. That's why fraud examiners trust it. It's harder to manipulate. 3 sections. You'll see this statement broken into 3 parts. First, operating activities. This is the day-to-day business. Cash received from customers, payments to suppliers, wages, rent, the basics. Second, investing activities. This includes things like buying or selling assets, maybe property or long-term investments. And third, financing activities. Cash raised through loans, issuing shares, or repaying debt. Each section gives you clues about how the business is really operating. Matters for fraud detection. Now, here's where it gets relevant for fraud. Let's say a company reports strong profits, but cash from operations is negative. That's a red flag. Something doesn't add up. Maybe they're recording revenue they haven't actually received. Or maybe they're pushing expenses to the next period to make the books look better. Let's walk through a practical example, just like you might see on the CFE exam. A company reports the following: net income, $800,000 cash from operating activities, minus $200,000 cash from financing activities, plus $1 million. So what's happening here? They look profitable on paper, but they're actually losing cash from their core operations, and covering it up with borrowed money. Now, here's a sample question. Which of the following is the most likely fraud risk associated with this pattern? A. Improper revenue recognition. B. Inventory overstatement. C. Payroll fraud. D. Unauthorized dividends. Correct answer: A. Improper revenue recognition. Why? Because net income is high, but the cash isn't there. That usually means the company is recognizing revenue that hasn't been earned or collected. So, what does the exam really test you on here? You're not preparing the statement, you're analyzing it. You'll need to identify inconsistencies between profit and cash. Understand when cash is coming from borrowing, not business success. Spot suspicious timing in cash flows. And most importantly, know that cash from operations is the part that really matters in fraud detection. That's it for this breakdown. Make sure you subscribe to the CFE Brief, where we teach with the exam in mind, every single time. Powered by the Ethical Finance Alliance. Up next, cash versus accrual accounting. See you there.